In the world of crypto trading, which is, let's be honest, ridiculously competitive, one name has just absolutely exploded onto the scene. It's fundamentally reshaping the whole landscape for decentralized derivatives. And that name is Hyperliquid. So in this explainer, we're going to break down exactly how this platform went from being just another newcomer to a total on-chain juggernaut. Okay, so here's our game plan. First, we'll get a handle on its just mind-boggling market dominance. Then we'll dive into the core problem it was actually built to solve. That classic headache of choosing between a centralized and a decentralized exchange. After that, we're going to pop the hood and look at its on-chain engine, figure out what the Hype token is all about, and then we have to talk about the very real growing pains and risks. And finally, we'll wrap it up by asking, what does this all mean for the future of trading?
All right, so first things first, let's just try to graph the sheer scale of Hyperliquid. Seriously, we have to start here, because you need to understand why it's become such an unstoppable force.
Let's kick things off with a number that is, well, it's almost hard to believe for a decentralized platform, over $10 billion. That's not monthly or weekly. That's the kind of volume Hyperliquid is handling in perpetual trading every single day. Just to put that into perspective for you, that's right up there in the big leagues with major centralized exchanges. And this chart, it tells the whole story. Hyperliquid isn't just in the running, it is absolutely dominating. It's captured something like 70% of the entire decentralized perpetuals market. It's completely dwarfing names you've known for years, like DYDX and GMX. This isn't just growth, folks. This is a market takeover. And all that insane volume, it's being fueled by a massive wave of actual users. The platform's user base just blew up to 1.4 million by the end of last year. That's a 4 times increase from the year before. This shows real, deep adoption and trust from a community of traders that's growing like crazy. Okay, so that's the what. But the big question is, why? Why did this happen so fast? To really get Hyperliquid's rise, we've got to go back and understand the fundamental problem it was built to fix. For years and years, crypto traders have been stuck between a rock and a hard place, right? You could go with a centralized exchange, a CEX, and get that lightning-fast, super efficient experience. But you had to hand over your assets, you had to trust a black box, a risk that became all too real for millions when FTX collapsed. The other option, a decentralized exchange, or DEX. You get total transparency, you hold your own keys, but it was often painfully slow and crazy expensive with gas fees. It was a trade-off, and neither option was perfect. So this created the ultimate challenge for the entire industry. How in the world do you get the kind of high-frequency, Wall Street-level performance that pro traders need, but build it all on a foundation of blockchain transparency where everyone can see what's going on? That was the billion-dollar question. And that brings us to the how. How did they pull it off? Well, Hyperliquid's answer to that question is all in its technology. This is really the secret sauce, the magic under the hood that powers its performance and finally solves that old CX versus DX dilemma.
This official definition really gets to the core of it. See, Hyperliquid isn't just another app built on Arbitrum or Solana. No. It is its own high-performance Layer 1 blockchain designed from the ground up with just one single ambitious goal, to build a completely on-chain financial system.
So let's break down how this custom machine works. At the very bottom, you have the custom blockchain itself. Running on top of that is a special consensus mechanism called HyperBFT, which is just optimized for pure speed. The engine of the whole thing is the Hypercore, a fully on-chain order book where every single order, every trade, every liquidation happens right there on the blockchain for everyone to see. And then, finally, there's the HyperEVM, which lets other developers build their own apps on top of this powerful base. And the result of all that custom-built tech? 200,000 orders per second. Nope, that's not a typo. While most DEXs are struggling to handle a few thousand transactions a second, Hyperliquid's dedicated design lets it operate at a scale that was pretty much unthinkable for a DEX before now. And all of those trades are finalized in less than a second. It's just wild. Now, of course, you can't have a Layer 1 without talking about its native token. And the Hype token is way more than just something to speculate on. It's the economic engine that actually fuels the entire Hyperliquid ecosystem. Okay, now this right here is a huge deal and a key difference. Unlike so many of its rivals, Hyperliquid's token launch had 0 allocations for venture capital. This was a very deliberate choice. They wanted to build a community-first project, making sure the platform's incentives were lined up with its users, not with a bunch of early investors just looking to cash out. And if you look at how the tokens are allocated right now, you can see that community-first idea in action. A massive 77% of the supply that's out there was handed directly to the community through an airdrop. It was a direct reward for the early users and believers in the project.
Now, over the long term, this allocation does shift a bit. The final breakdown shows a larger piece of the pie for insiders and core contributors. But before you get worried, this is because of long vesting schedules, which are designed to make sure the team is locked in and committed to the project's success for years to come. It keeps everyone pulling in the same direction.
And this token isn't just sitting there. It's deeply woven into the platform. You use it to pay for gas fees, to vote on governance proposals, to help secure the network by staking with validators, and even to get discounts on your trading fees. It's even deflationary because the platform uses its fees to buy back and burn hype, which shrinks the total supply over time.
All right, but with this kind of explosive growth, there are always going to be major challenges. It is so important to do a reality check here and remember that no platform is perfect, and Hyperliquid has definitely had its share of growing pains. This quote from an industry report just nails the platform's biggest vulnerability. Because anyone can list a new asset and you can trade with high leverage, the risk of somebody manipulating the price on a thinly traded token is very, very real. And this isn't just some theory, okay? It actually happened. Late last year, the platform got hit with $4.9 million in bad debt. What happened was an attacker manipulated the price of a meme coin that didn't have much liquidity. This caused a whole cascade of bad liquidations, and it ended up being a really costly lesson about the dangers of a totally open system. On top of that market risk, there are a few other key things to watch. First, governance is pretty centralized. The top 20% of holders control almost 80% of the voting power, which kind of raises questions about how decentralized it truly is. Second, the competition is heating up, with new rivals like Aster and Lighter trying to grab a piece of the pie. And finally, there are large token unlocks coming up, which could put a lot of selling pressure on the Hype token.
So, after weighing this incredible, explosive growth against some of the very real risks, we're left with one big final question. What does this all mean for the future? Where do we go from here? When you boil it all down, what Hyperliquid has proven is that it's actually possible to solve that dilemma we started with. It's shown that you can successfully blend the raw, hardcore speed of a centralized exchange with the on-chain transparency, the self-custody, and the fairness of DeFi. It has set a completely new standard for what's possible. But the platform's vision, it's much, much bigger than just being a better place to trade derivatives. The goal is to become the foundational layer for a whole new financial world. So the ultimate question, as you see right here, is a huge one. Can Hyperliquid keep its top spot and actually build that unified on-chain system that could one day house all of finance? The answer to that, well, it's going to shape the future of trading for all of us, and only time will tell.